What's up, fam? Welcome to another episode of Six Figures to Bigger Figures. This is my story of how I inherited, lost, regained, and will surpass a six-figure net worth. All I ask is that you like, share, and subscribe to at 6FTBF. All right, so now the IRS started accepting federal tax returns about a week ago. Washed. Sorry, I couldn't help it. I'm a dad. That's what I do. Anyway, I thought it was appropriate to talk about some of the questions that I've been receiving as a tax preparer and give you some advice on how you can best put yourself in a position to do well if you're receiving a sizable tax refund. All right, so let's do it.
It's 6 digits.
First, let me say this. Your economic impact payment, aka your Stimmy, is not taxable. Now, I told you all about taking advice from TikTok and IG Reels. I know what this looks like, but this is different. All right. First of all, I am a CPA, and I'm not clout chasing, trying to get likes and stuff. I'm actually really trying to give you help. Okay. This is what I'm here to do. I'm trying to add value as much as I can. So, I'll tell you what I tell my clients. The federal government will not go through the effort of giving individuals a stimulus to stimulate the economy just to take some of it back. If they were to do that, they should just give you whatever you should have because it's their money anyway, right? So they wouldn't give you this money to then tax you on it to get it back, right? That's not how that works. So that's kind of the first thing, right? The second thing is I prepare tax returns, and that's not what's happening. Here's what is happening. If you haven't received your second Stimmy check, there's something called the Recovery Rebate Credit, which essentially gives you, if you claim it, it essentially gives you your stimulus check in form of a refundable tax credit, right? So you still get the money. Now, for those who are waiting and in that area of getting a sizable tax refund, here's what the government wants you to do. They want you to take that money, go and stimulate the economy, meaning consume more goods, purchase more consumer goods, right? But you're not going to do that, right? You're part of the 6STBFM. We know better. What we're actually going to do is this. We're going to take our money and pay off any outstanding credit card or store credits or land of credits that we have out there. Okay? I'm not considering your student loan, nor am I considering your car loan. I know those are bigger obligations, and that's going to take a longer time to pay down. But those credit cards, where your interest rate is in the teens, those store cards and those lines of credit with different stores that don't add to your credit in any form or fashion, they just take away from it, we're going to get rid of those, okay? Now, the credit card does add to your credit score, but you're paying teens exorbitant amount of interest, and that's not the way we build wealth, right? So we need to get rid of those. Make sure we're having a healthy habit with our credit cards in which we're cycling these payments out every 30 days, right? Or every month. Once we pay off all our credit card and store credits or store lines of credits, what have you, if we have any money left, we're going to take that money and make sure our emergency savings is up to snuff. In my last episode, I said we should have between 4 to 6 months of emergency savings. This is a great opportunity for you to make sure your emergency savings is where it needs to be, okay? Get it to at least 4 months. Then, if you have any remaining money, you're going to take that money and invest, okay? Now, do your own research, but here are 3 stocks that I like currently. I like the price of Apple. I like the price of Exxon. That's a good income play because they're maybe about 40% away of their 52-week highs. Strong company. They've been around forever, and they have a pretty good dividend. And BA, who apparently can't get together. There was another engine issue. So we may see an impact in that stock price tomorrow, me being Monday. Who knows? If the price does go down even more, I like this stock. Okay. And that's it, right? Quick, short, easy. So first off, your Stimmy checks are not taxable. If you have not received your second Stimmy check, you can get refundable credit on your tax return. Do not use that sizable refund if you are getting one. Do not use it, just buy more crap, okay? Use that money wisely. Pay down your credit card debt, pay down that consumer debt, that line of credit, that store credit, get your emergency savings up to 4 to 6 months, and invest, all right? This is the key. Get rid of non-performing debt, purchase performing assets. It's kind of simple actually, right? Sorta. All right, let's go.
It's 6 digits.